Today we're going to do Chapter 6, which has to do with what I call civility and social responsibility in RF banking. In the last chapter, we talked about the role of money and how it is used to help the economic growth and prosperity by providing credit to people. And the question is how to reward those who own the money in order to entice them to invest in the community. The big question that we all face is, now, if you are the owner of money, which really is something that is good because we hope and assume that earn this money ethically, so how can you first actually protect this money and then how to use it to participate in the growth of the economy and at the same time grow this money? This way you have a good economic growth in the community and at the same time you have enriching yourself in an ethical way. The question is, how can we do that in an ethical and profitable way in the same time? So a question of RF banking and the system as compared to the Riba-based system is based on a clear understanding of money and how the United States dollar monetary policies are handled. This chapter, chapter 6, which is a follow-up to chapter 5, is what is important about the RF banking and banking slide. What we'll talk about today is civility and social responsibility in the RF finance system. We hope that through this important dimension in the way we deal with people, it will impact the community in a positive way, and it will have a good and productive economic growth, create new job opportunities, and unity leading to a future peace and fairness and justice for all people. Now, the most important aspect that we all strive for in the United States is to have fairness among people without discrimination based on ethnicity, skin color, background, religious beliefs, and that is what is the unique thing about America, which in my humble opinion, a real manifestation of the Judeo-Christian Islamic values of justice as we all believe it. The most important thing in what we do as RF bankers is that we are all watched by a higher authority, that is our Creator God, and it is He who revealed the wisdom to Buddha. It is He who revealed the wisdom to the Hare Krishnas, to the leaders in the Hindu thoughts, to Buddhism, to the Torah of Moses, to the Judaic values that were taught in the Torah, and to the beliefs of Jesus and the revelations of the gospel to all people and the Quran in what I call a Judeo-Christian Islamic system. The next slide, as I said before, in the 19th and the 20th century, mostly the 20th century, was spent by the RF bankers to focus on the tail of big elephant, and that tail has been how to put together the contracts of how to structure a riba-free finance contract. But it never focused on the real big elephant body, and the body of that big elephant consists of two important parts. The first part is the monetary aspects of the economic system. In other words, how you define the value of the dollar. Is it defined by whatever the market says it is, or you have to relate it to a basket of currencies and commodities using the commodity indexation concept, and then how to define the value of something you buy, and that is using the market marking to the market system. This way, when you embark on buying something, you know that this thing is priced right in the market, and whenever you use a pricing thing like a dollar, a pound, a euro, you know that you're paying the right price, and that price is universal and consistent throughout all boundaries. And this is what I call the spirit of Islamic banking and financing. Now, the most important thing about what we do here is what I call social responsibility, that we are out to really help hold people's hands, to make a difference in their lives, to make their lives better, and to be fair to them. And the movie that dramatized all of this is something that is all known to all of our staff because we watch it twice a year, and that is the Jimmy Stewart movie by Frank Capra that was made in 1946 to dramatize the Depression of the 1930s, a movie called It's a Wonderful Life. And I know that you all remember the movie. You can see here on the left top square, you can see Jimmy Stewart and his wife and the children celebrating the fact that the community responded to raise funds to help them meet the requirements of the OCC, the Office of the Thrift Management. And give you an interesting piece of information on that movie. During the era of McCarthyism, this movie actually was rendered as a communist movie, and it should not be shown in the United States. And after a few years, it was released, and now, of course, you can have it in color. And on the next caption here, see Jimmy Stewart and the big financier, the man who owned the city, literally, shaking hands with him and trying to clean his hand, and Jimmy Stewart talking to the public, trying to pull their money out in a bank, what we call run on the bank. Now, one important thing that I want to talk about today is what happened in September 2008. In the United States, after the Depression of 1930s, the Congress and the different committees that studied what happened concluded that it was due to taking the people's deposits and speculating with it in the stock market that the Depression has occurred. What happened was the Congress has concluded that in order to protect the deposits of the public in the banking systems, and in order to encourage the public to regain confidence in the banking system, they had to do something. So the first thing they did was to pass an act which is called the Glass-Steagall Act. And by the way, Stiegel is spelled S-T-E-A-G-A-L-L or S-T-I-E-G-E-L, which is the German way of spelling it, of 1933. In that act, it was stipulated that no commercial bank, no depository institution is allowed to deal in stocks and stock activities and investment banking activities. So in 2008, the Glass-Steagall Act was repealed. Now, there was a lot of lobbying in the United States Congress by one important entity, and that is a company that was called at the time Travelers Group. That Travelers Group was a company that was put together by a man. His name is Sandy Wiles. Sandy Wiles is a man who started his business as a mail carrier at a small brokerage company in New York, and he grew his business up to put these companies together, and he bought a small company called, without telling you the names, but anyway, it's a brokerage company, and he made a lot of money, and he went and participated in American Express to form what we call Shearson American Express. So American Express got itself into the investment banking business, and he convinced them to buy another investment bank called Lehman Brothers, and through this they formed the Shearson Lehman American Express. And Mr. Sandy Wiles was the president of Shearson Lehman and Express. Sandy Wiles got in a big disagreement with the chairman of American Express, Mr. Robinson at that time, who was headquartered in Atlanta, Georgia, and they split company, and he sat on the side. He went in, and I'm saying this in detail to show you how he, Sandy Wiles, from nothing created a huge empire. He went and sat on the sides, and he found a company called Commercial Credit Corporation. Commercial Credit Corporation specialized in giving loans that are at very high loan shark rates to small people who needed these loans. He took the company, and he and his deputies, two of them, one of them is today the chairman of the board of J.P. Morgan Chase. He and his deputy went in and made the company public, Commercial Credit public. And when they made Commercial Credit public, they went in and bought a company called Smith Barney. At the time, Smith Barney was owned by the Kuwaiti investment group that did not know how to run it. He bought it from them, and he made Smith Barney. Later on, he went to American Express, and he told them that, by the way, I want to buy Shearson back from you. He bought Shearson back from American Express, and American Express has spun off Lehman, and Lehman Brothers became on its own, and he formed Smith Barney Shearson. Now he's got a huge investment banking firm called Smith Barney Shearson. He's got a company called Commercial Credit, which does loan sharking, essentially, lending at very high rate. Their motto was, and this is for you as bankers, do not worry about interest rates. People worry about the monthly payments. So when you sell your loans to the public, and usually were poor Latino daily workers who wanted a car, who wanted a saw, they wanted something to rent. Actually, this is called today City Credit, Citibank Credit, or Citibank Financial. You'll see them in small stores on Whittier Boulevard and small communities. So he got Commercial Credit, which is a public company. He mixed it with Smith Barney Shearson. Now they made an investment banking firm and a financial company at Lens, and he wanted to look for an insurance company that will provide him with the insurance arm. And he found that in the Travelers Group. So he went in and he bought Travelers. So now, once he put together an insurance company, an investment banking firm, a finance company, now he made the first part of the big hope and dream that he was having. What was his hope? His hope was to have a wonderful financial institution that will be a supermarket of financial services that offers everything somebody wants. And that is a bank, an investment bank, an insurance company, and a finance company under one roof. And he found Citibank. He went to Citibank and he said, let us merge together. And that merger was not approved until the United States repeals the most important act that represented the lessons learned in 1930s, and that was the Glass-Steagall Act. That was repealed in September 2000, and I apologize, it's a typo, you're right. In September 2000, the Congress repealed the Glass-Steagall Act, and it was hailed as one of the most important developments in the history of financial services, and it was branded as the most important development, which would result in unlocking the huge potential of the financial markets. So at that time, Citibank and Travelers Group were merged, and it was the first ever financial institution that would offer everything from investing your retirement plan in the stock market or in the bonds market using Smith Barney Shearson, or financing your needs using Citigroup Financial, or offering financing for your needs using things like the banking facilities of Citibank, or insuring your insurance needs using Travelers Group. And that was an interesting thing. I personally witnessed this era. At the time, I worked for Smith Barney, and Smith Barney Shearson actually was an investment bank that invested people's assets in the form of retirement plans, 401k plans, people's savings, and so on and so forth. And when we merged with Citibank, we were told that this is going to enhance our capacity to access other assets of our customers. For instance, you can access, if I am Yahia Abdul Rahman and I have an account with Smith Barney, then Citibank can look at the other assets I have and would invite me to open an account at Citibank. And then travelers would call me and say, instead of insuring your car and your home with State Farm, why don't you come and insure it with Citibank, and so on and so forth. And that was a very important move in the history of the United States banking industry. But then something came up which we felt, and that was the collision between two cultures. The culture of a commercial banker who is usually risk averse. Commercial bankers don't want to take risks. So if we have Ghaziani and Arshad who want to finance the commercial building, then Alex would demand that she wants to make sure that if they are self-employed, she would demand that she would know who are they self-employed with, and if the companies that they represent and paying them their salary will be able to pay these salaries for the next 3 or 4 years, because we are financing a long-term project, because she is risk averse. But then you go to the commercial bankers and they have a different attitude. They do not want to see $1 left on the table. They want to invest the last dollar they have in the markets in order to gain more money. And that is not only that, but if they can leverage their assets by 10%, 50%, 100%, that would be fantastic, because this way they will increase the profitability, because they are risk takers. So what you had here, you had two cultures, the risk averse of the bankers and the risk takers of the investment bankers. And I want to talk to you about this in great detail, because this has been the biggest dilemma in RF banking or Islamic banking in the 20th century. The people who are promoting RF banking, they wanted to mix investment banking with commercial banking without knowing the difference, because they have never experienced the difference. And I hope that by now they understand that these are two different animals. What the Islamic bankers said, that we need to get every depositor to participate in the profit and loss. To make it real, true Islamic, they have to participate in profit and loss. So how can you ask a simple employee who wants to deposit his salary or his life savings in a bank, how can you ask him to expose his or her life savings to the risk of profit and loss? Well, you can do that by choice, which is fine. And the choice is to invest your savings as an investment in an investment bank. But you cannot mix the function of a commercial bank as a depository institution, which is entrusted with the savings of your amana or your trust of these funds, mix it up with an investment function which would expose your savings to the risk of loss of anything you have. That is what I said. So what, for instance, the biggest dilemma they had when they started the Islamic Bank of Britain, IBB, was their collision with the Financial Services Authority in the United Kingdom, which is like the OCC, the institution that grants licenses to these banks. Was they wanted to have the accounts, every checking account, to be exposed to profit and loss. And actually, they have devised a roundabout way of getting the customer to sign a disclosure saying that they are willing to accept the loss of their principal and they are happy about it. Of course, not all the customers wanted to sign, and many of them refused to open accounts until some other actions were taken, and it ended up being exactly like a regular checking account. So the first big dilemma that you have in riba-free banking or Islamic banking, especially when it comes to applying it in the West, has been how to make sure that you make people understand the difference between investment banking and Islamic free banking. Now, that put in the second dilemma. And the second dilemma was an investment banker now is running the show at a commercial bank. And that's what happened with Citigroup. And if you watch the interview on Frontline with John Reed, actually it's not Frontline, it's Bill Moyer. It's called Bill Moyer program. I think it's Bill Moyer Tonight with John Reed. If you can Google it and watch it, you'll be fascinated. John Reed, who was a very respected man, Citibank, by the way, for those who do not know, is the bank of the United States government. When the United States signed agreements with Argentina, with Chile, with Mexico, with Saudi Arabia, which has in it some monetary transactions, they are usually conducted through Citibank. And that John Reed was a very respected man. He actually rescued Citibank from complete collapse in 1986. So he was a very, very respected man as a banker. And by the way, before the deal for the merger between Travelers and Citibank was confirmed, it was blessed by no one else than Alan Greenspan. And by the way, Mr. Rubin, who was the Treasury Secretary in the Clinton administration, was rewarded to become a member of the board of directors of the new Citigroup, and later on a very highly paid executive of the new Citigroup. Now, John Reed says that I was in the board and a board member and a co-chairman, and the highest bonus I got ever was $1.25 million a year. Suddenly, 6 months later, they gave me a $15 million bonus. So I asked, why? What did I do different? They said, oh, you're managing all of this money, and you're entitled to benefit from it. And they ended up giving me $15 million, and the story kept growing and growing because they wanted to make sure that they reward their participants by giving them commissions that may not have reflected the profitability of whatever they have done. Commissions based on the assets they gathered. And that is essentially the story that started 2008. When the investment bankers got into the banks, they found money that were not used. Now, how so? You remember when we talked about the reserve requirements of banks by the Federal Reserve System? Like I said, a Federal Reserve Bank, in order to control the liquidity in the market, they can put a reserve requirement of 10% or 8% or 5% or 12%.
Yes.
Okay, what happened was they came in and they found that they have been fully invested. that they made loans to GM, to DuPont, to Dow Chemicals, to Coca-Cola, and they made all of these loans. Now they need to make more loans, because the more loans you make, the more profits you will make. So, and they don't have enough money to lend anymore. So they said, well, what's this 8% or 10% reserve requirements that's sitting on the side? We told them this is the requirements of the government. This is the requirement of the Reserve Act of the banking system. So they let the imagination grow. And if you wanted to read about the details of what happened, I would be glad to relate you to a wonderful book by a lady who is the chief editor of the Financial Times, explaining in great details how this actually developed. And what they did essentially was to try to fool the system. How? He said, if we have loans for large companies, and these loans for large companies are secure loans, because who can ever believe that Citibank will fail? Who can ever believe that General Motors will go bust? Who can ever believe that Ford will go bust? Who can ever believe that IBM will go bust? So all of these loans are like gold. So if we can take them off the balance sheet, give them to another institution, and then on paper, this is all on paper, and then get the liquidity of that other institution into our bank, then we can lend more. Let me make this easier. Suppose the Bank of Whittier, God has been kind to it so much, and that Alex wants to make loans for $100 million, and Alex says, I can't find any liquidity. And she says, so she comes to me and says, well, I need to make all of these loans, so what do I do? I say, well, using their logic, I say, well, we have loans to Mike Abdul Rahman, he's a very high credit person, and to Dan Hendon, he's a very high credit person, and to Bill, and all of these people. And these are very good papers. So I'm going to take all of these papers and find another bank which has money, a lot of money, and you don't know what to do with it. And I'm going to say, Mr. Banker, I am going to pretend that I'm selling these loans to you with a promise to buy them back after 2 years or 3 years. So when I give these loans to this banker, that banker will give me the cash. This way, I am suddenly liquid again, and then Alex can go and lend money out of her department. Well, actually, because there is an arrangement of buying back, then they agree on a spread, because this way, I'm giving you a loan, and that loan really is my loan, but it doesn't show up on my balance sheet, and you're not responsible for it, and we're going to give you a reward, Mr. Banker, with a lot of liquidity of 0.5% or 1%. It is something that is agreed upon. Okay? We looked around to find that bank which has liquidity, and they found that it was a World Bank. So the World Bank has so much money, they didn't know what to do with it, and indeed they gave him some paper and took the money back, and they started the process. But then they wanted to expand more. They found that the United States has a lot of banking regulations that are actually very difficult to get around. And in the same time, they found that the insurance companies also have a lot of money. They didn't know what to do with it. So what happened? They went to the insurance companies, and they found that in the United States, the insurance industry is highly regulated by the regulators in the United States, but not in the United Kingdom. So they focused on the UK markets, and they stumbled into a company called AIG. And that company called AIG, actually, we all know what's AIG, offered to take these loans out and give them the cash and offer all on top of that the insurance, and the rest was history. And I wanted to give you the details of how your imagination can run to produce creative things that may not be ethically acceptable, they may not be ethically whole, and that is what creates the big problems. And of course, the biggest of all is what happened to the United States in 2008. So people say that the meltdown in 2008 was due to the fact that there was not enough regulations. My position is that you cannot regulate judgments. In other words, I can take Mike Delati and tell him, Mike, I'm going to regulate how to judge things. Mike has his own judgments. Dan Hinden has his own judgments. Alex has her own judgments. Muhammad has his own judgments. I cannot regulate them. And these judgments actually are based on an integration of everything that you learn from the age of 2 and 3 and 4 to the time you graduate from school and join an institution, because it's a collection of the value system that you believe in as an individual, and that is actually what we want to talk about today. Now, to prove to you that the Glass-Steagall Act repealing was actually a very risky mistake, the United Kingdom is reintroducing a regulation which is similar to the Glass-Steagall Act, and it's being discussed in the legislature at the moment in the United Kingdom. So my thesis is that governments cannot regulate or legislate judgments. I cannot issue a ruling which says, Maria Abdullahi, whenever she makes a judgment, it has to be this way. Or Mustafa Rabia, whenever he makes judgment, it has to be this way. It is the job of the family, the spiritual leaders in the community, the media, and the judge, and the culture in general. The first point I want to make is that it has been established historically that human nature, if untamed and not civilized, is characterized by selfishness, violence, and greed throughout history. That religions, including the Judeo-Christian Islamic system, brought to the world by Prophet Muhammad and Prophet Jesus and Prophet Moses and all the prophets, Buddha, Krishna, I can go on and on. They brought in to continue, deepen, and legitimize and expand, detail, and seal the teachings of all prior prophets and messengers, focuses on the training of the individual spiritually and ethically, and to suppress selfishness and greed, and to promote goodness. Now I want to first establish a number of definitions that I hope we'll agree on. First, the definition of success. And please listen to my definition of success. Success is the progressive realization of a worthy ideal. And let's dissect here what I'm talking about. First, it is a worthy ideal. Ask yourself, what do I stand for? What do I want to achieve? What do I believe in? What is that worthy ideal that I go to bed with and wake up in the morning with? And then, how am I going to realize it? And realizing it will be done in steps, so it is a progressive realization of a worthy ideal. And in realizing this ideal, you realize it in little baby steps, starting from the easy to achieve and growing into the more difficult to achieve. And the second point, the question that I want to ask you to all think of is, what is your dream? What do you want others to remember you of after you go? So, and this is a question that I hope you will be able to ask at the age of 22, 24, 28, 30, 40, 50. Before you go to bed every night, ask yourself, when I go, what do I want people to remember me of? There are people who live biologically on the face of this earth, and they go and die. People will weep about them, but will never remember them because they haven't left behind something that people remember them of. So please ask yourself, what is that thing that I want to leave behind? And you need to decide now on all of these issues, and I hope that at least 20% of you will do this, because I know you will be very, very successful in the future. Next slide has to be what we call the RF dream for America and the world. Now, we as Americans who believe in the RF system need to produce for America a new breed of bankers. We call them the RF bankers, who stands on two important pillars. The first pillar is the pillar of faith-based, moral, ethical, and spiritual fulfillment. You know, and believe me, many of you are young professionals who have not had a chance to work in other organizations. But believe me, and those who have worked in other organizations will actually support what I'm saying, is that the moral and ethical and spiritual fulfillment may be mentioned once or twice and may not be the real foundation of decision making. But this is something that we look at very seriously in an RF banking setting. The second pillar is the pillar of excellence in the quality of products and services offered by the RF bank and its superior operating results compared with peer conventional Riba-based banks. The society that we hope that we participate in building is also a very important society. It's a society that is built on intellectual and mental persuasion, in which our mind is the key to knowing God and live by the Judeo-Christian Islamic values. Now, when I say the intellectual and mental persuasion is very important, because it is important to sit down with our customers and reason with them and tell them why we have reached these decisions and why we follow this line of thinking. And I realize this can be very, very difficult because it's different, because nobody does it this way. But I promise you, when many people get to know about this, it will catch on, the snowball will start snowballing, and the momentum will be picked up, and the sky will be your limit. We need to expand within our means and focus on human resources, which is the most important thing. One very important thing that we have focused on over the last 9 years, and believe me, the number one goal was to develop quality human resources, to develop the Bill Stilwell, the Dan Hinden, the Alexander Dang, the Wajia, the Ghada, the Maria Abdullahi, the Mustafa, the Fatah Sukkar, Anwar Sharif, everyone, please forgive me if I forgot to mention your name, Mohammed Abladi, Mike Abdelati, Matthew, who else did I forget? Where's Pasadena? You can speak Pasadena so I can see your pictures.
Sarah Stilwell.
Who else is there in Pasadena? Endal, Zakiya, Fauziya, every one of you. Each and every one of you is a very important asset in this process that took us 9 years. And when it's all said and done, I promise you, you will be making history. These people are well-trained bankers. All of you will be well-trained RF bankers and administrators. And based on the financial strengths, which is enhanced by voluntarism. Now, many of us want to volunteer their life and their time so we can serve the communities. Expand our market share for our services to attract all people of all faiths to the RF banking services to become the preferred banking system in the marketplace. Third point is we need to stress the requirement of building a true partnership between the customer and the community member, the families in the community, the RF banker, administrators, and the community at large. We need to motivate as many of our youth in the community to study, to be accountants, financial analysts, and business managers. You know, if you talk to your sisters and brothers and ask them, what do you want to be? They will tell you, we want to be lawyers, we want to be politicians, we want to be doctors, we want to be engineers. But very few people will want to be accountants, financial experts, and this is something we need to entice people to do, especially those who believe in moral and ethical values. We need to sign onto a vision of building a standardized nationwide RF banking system that is as good as and hopefully better than the conventional banking system. And remember, we're not out to dismantle the RF, for RF banking to dismantle or demolish the Riba-based banking. They are standing together, competing with each other, and of course, the success will be for those who are most attractive to the marketplace. So we talked about success, and this is something that you can read on in the values on the spirit of RF banking. The second thing is time horizon, and this is something I want to share with you. In the time horizon, at least in my thinking, and those who like it, I hope they will sign on to it. You know, there is always life which is defined by a finite number of years. These can be 50 years that you live, 60 years, 70 years, 80 years, 100 years. But life is a continuum, and that continuum expands forever. And when you think this way, then you will know that you'll be a big achiever. Actually, my father used to teach me to live as if you will live forever. And when you think of death, it might happen to you tomorrow. And I was thrilled to death to hear what the very famous founder of Apple Computers, Steve Jobs, saying that he always thought that he will die tomorrow, and he always asked himself, what will I do so I can be remembered of? So this is something that I want to share with you. Education and productive work is another important part of the spirit of the RF banker. We respect and value hard work and its tangible contributions in terms of quality, creativity, and service. We respect people who work hard, who give out of their heart, out of themselves, so they can excel in what they do. And RF banking stands on the two pillars of faith and excellence. And then we want to talk about the ideal society, and I'm going to leave you to read about it in great details. And I'm going to talk about the government, business, and citizens' responsibility in the ideal society. There is a very nice quote I wanted to share with you by Professor Stephen Carter. Now, Stephen Carter is a professor of ethics and morality at Yale University. He says that the definition of civility is the total sum of sacrifices made by members of the society for the benefit of the total of the participants in that society. So if Bill sacrifices a bit, Dan Hinden sacrifices a bit, Maria Abdullahi sacrifices a bit, Zakia sacrifices a bit, Shamini sacrifices a bit, and so on and so forth. The total sum of these sacrifices creates civility. If somebody treats me harshly and I say to him, thank you, that's the little sacrifice I made. Then I create this atmosphere of civility that not at the spur of a moment I grab somebody's neck and I fight with him and shout at him and so on and so forth. Now the elements of the RF economic system, production, every individual must work, of course, to produce, and products must be useful and not harmful as defined by the law or the Judeo-Christian Islamic values. And then the distribution system. In the distribution system, we believe that God owns wealth, power, and natural resources. They are gifts from God to human beings, men and women, and they are responsible to manage it in the proper way. The individual and the institution is appointed as God's representative and trustee and custodian to manage them. And every being, human or not, has a minimum requirement to be able to live in dignity. This should be provided by government institutions to anyone who cannot meet his or her own needs. Private property and ownership are sacred, rights and must be protected. By the way, the most important foundation of a civilized society is to define what you own and to protect this right as the most sacred right to be protected by the government and by the society. And the system is paid back and balanced out through the act of a ritual of almsgiving and voluntary giving as an important pillar of the system. Government is responsible for the basic needs of every citizen. The basic needs are food, shelter, clothing, education, healthcare, and infrastructure, and of course safety. The only road to richness is hard work and the assumption of risk, and not gambling and speculation. The law defines exactly how the estate is distributed after death in a detailed description as revealed in the Quran. As far as consumption, and this is very important in the way we think. Now, as you have noticed in the difficult economic situation we have lived in, everybody is thinking about increasing economic activity through increasing consumption, encouraging us Americans to go out and buy things, go out and consume things, and so on and so forth, because our economy has been built on the consumption of things. Now, we as RF bankers do not believe in overconsumption, because those who overconsume are, in my value system, are people who are in the companions of Satan. And I love the cultures in Asia, for instance. The Asian people are very, very thrifty when it comes to spending money, to preserving assets. And that is something that we hope that we'll cope with and live by as we live here in the United States. And that will make you actually stand out, and people will look at you and look up to you to emulate you. And we also make sure that we do not practice wrong activities of bribery, illegal profits, abusing the legal system, reckless spending, and extravagant over-consumptions, which are not allowed. And everybody is trained to plan for the future. I am sure that all of you know the story of Prophet Joseph, the 7 fat years and the 7 lean years. What are the goals of the business? To maximize profits, that's true, but also maximize the quality of service in a legal and fair way in order to realize a better life and living standards with freedom and independence of the individual without any discrimination. The second objective is to adhere to the free market system and free international trade as a natural mechanism of getting people to know each other in order to promote mutual respect, peace, and prosperity through communications, trading, and mutual benefits. History has shown, and let me repeat this, for those who come from old countries like India, like Egypt, like Pakistan, like Sudan and Ethiopia, I just came back from Ethiopia, you will find that civilizations and peacefulness were established through trading, interrelations between different people that was crowned through intermarriages. So trading and intermarriages produced larger civilizations and produced a peaceful atmosphere through which the civilization flourished. When that stopped, civilizations start fragmenting and imploding from inside, and that is the end of that civilization. The secret for the perpetuation of the largest civilization in the history of mankind, and that's the American civilization, is very simple. That it is an open system, that it is a self-cleansing system that makes sure that it cleanses its mistakes by being open about discussing them. And then adherence to the free market system, that is obvious. And then I want to conclude today with the 10 golden promises of the RF banker. We do not speculate with people's money and trust. That's why, frankly, how many millions of dollars do we have sitting on the ledger, Mohammed? Doing nothing. We have $22 million. Matthew, how many?
Around 11.
Matthew, how much?
We have 11 million.
No, you're wrong. You have $11 million in cash sitting in the money funds, and you have $12 million in CDs that are sitting making 0.5 and 0.6 and 0.7%. You got $23 million that need to be invested in good productive projects, but we are so careful about speculating with people's money and assets. I want to repeat this to all of you, so please help us out. Invest this money. If you have anybody who wants to buy a car, buy a home, refinance a home, finance a building, finance a pharmacy, please let us know. We also fulfill our promises. When we promise somebody something, we meet the promise. We respect money because money respects those who respect it. We do not forget our moral responsibility to local communities, despite the fact that we appear on paper not doing so, like Alex, with the CRA situation we're in. We do not discriminate, and we mean what we say. Look at the wonderful collection of the best talents we have from different backgrounds, different national and ethnic training, and so on and so forth. We invest in our clients. We do not rent money. We are socially responsible. We are sensitive about who we deal with. We are conservative, and we look at each and every of you as our partners. I am also gratified to work with each and every one of you. And I'm also gratified because the values that we're trying to promote are now being copied by others who are emulating us. You go and read the website of University Bank. I don't know if you have had the chance or not. You will find that they are copying from our values, which is good, fantastic. You go to Ijara, they are copying from our values. And we're very gratified and thankful for this. Now I want to conclude with the elephant and the tail, and you know the story. And I want to thank you for your patience and listening. And I miss you all, and I hope to see you soon. Any questions? The question is, what are hedge funds, right?
Yeah.
Now, hedge funds actually are, now, and I'm glad you're asking this question, because if you invest your money, you have a number of options. You can invest your money with Merrill Lynch, TD Waterhouse, or Charles Schwab. You call up the broker and say, I want to invest $2,000. He will say, yeah, no problem. You can buy stocks. So you can buy stocks in Apple, you can buy stocks in Google, whatever company you like, buying and selling the stocks. The other way of investing your fund is to invest your funds into mutual funds. When you invest in mutual funds, all of these investments are regulated by the Securities and Exchange Commission. And as we discussed earlier, to handle people's money, you have to register with the Securities and Exchange Commission on why you want to collect money from people and what you want to do with it and what are the risks of losing this money. And that is what we call the registration requirements of the SEC, the Securities and Exchange Commission. Again, a product of the 1933 study of the reasons for the collapse of the American markets during the Depression. Now, people who are dealing with the money of the sophisticated investors who know that they can lose their money without impacting their wealth that much, they can avoid registration with the SEC. Actually, what we have, we at the Greater Pacific Bank shares, when we make an offering, we make a special kind of offering that is only available for sophisticated investors. These are investors who are worth a minimum of $2 million in value, in asset value, and who have been making $200 million I'm sorry, $200,000 yearly income over the past 2 years. These are called accredited investors or sophisticated investors. So some very big manipulators and investors with proven track record would say, I'm going to form a club, and that club will be only for the rich. And the minimum investment in that club is $10 million or $20 million. And they raise 10 billion, 20 billion, or 30 billions, and they take it and they invest it in different markets without any supervision or controls by the government, financial authorities. And that has actually been a very big factor for the instability of markets. So if you have a fund which is $100 billion, you can absorb the economies of Asia back in 1997, 1998. How? By going out and saying, I'm going to buy as much of Asia as possible. When you buy as much of Asia as possible, what happens to the stock market there? It goes up big time, right? When it goes up big time, other buyers will say, oh my goodness, I want to be part of the party. They come in and invest more money with you, and then at the peak of the market, you pull out of it and you collect everybody else's money and you make profits of 20%, 30%, and 50%, and you are announced as a real king of the road. The most famous person to do hedge fund investing has been George Soros. I don't know if you heard the name or not, but George Soros made his name and fame in the first speculative attack on the British pound in 1986-87, where he actually was the reason for the British pound to lose about 50% of its value. He did the same thing to the Asian currencies in 1997, 1998, and he became one of the biggest hedge fund investors. And I think he made for his fund last year about 30% in profits. But he was number 2 in profits, and that is essentially what hedge funds are. They are investment clubs of the very, very rich and famous and affluent, and they can have real interesting effect on cornering markets, cornering the stock market, cornering the gold market, cornering the agricultural markets, and so on and so forth.
How is commodity in Chapter 6 related to money and the social responsibility?
Well, commodity is a form of money because in the past people used to exchange commodities as a form of trading. And if you're not socially responsible, you can present me with a load of sugar that is supposed to be 50 kilos and there are only 40 kilos. And that is something that's not socially responsible because you just misrepresented weights. Commodity means you cannot take opium and sell it in the market as an income producing commodity, and it is not socially responsible to participate in it. Did I answer your question?
Yes, but you also mentioned money is to understand money is number 1 to be social responsible.
To understand money is money does not bring you health, it does not bring you happiness. It can enhance health and happiness, but it is not health and happiness. It is not something that you can eat, it's not something that you can swallow and make you happy. It's something that can meet your needs. The sad thing is that, and believe me, in our stage of the game, you might be laughing at this, but I have met people who are very, very rich, and they still can misrepresent facts and call it good business, and it is not good business.
Doctor, in Chapter 6, you mentioned SPIC, but I know you didn't mention SIPC. Can you tell us how that relates to Riba, and if it is, because I know there's a lot of questions by customers who call especially to CD holders. How can you guarantee?
I mean, well, FDIC. That is the point. The point is, some people will call you and say, "Hey, how can you say that this is riba free and you are guaranteeing my principal?" Well, the whole idea is how I'm going to take your principal and how do I handle it. I'm handling your principal as a trust with me. It's like an amana, something that you are putting with me as a bank to keep it for you. If you want to invest it in a certificate deposit, then I look at the portfolio of investments that I have, the portfolio of loans that I have, look at the average return on investment on this loan portfolio, take away from it the overhead and the expenses and any allowance from loan losses, and I will give you the average rate of return based on this. But I'm not going to tell you that in order to be this, then it can be profit or loss only if it is in an investment banking operation. Do I make sense?
Doctor, can we also, on that point, can we also say that FDIC is a form of mutual insurance to help the people that participate in the system if one has problems?
Well, actually, say again?
Okay, I was about to answer, Mike. It's not mutual. It's only beneficial for the customer, for the investor.
No, it's not. It's not really. It is not. No, it is not.
Each paying.
It's not a mutual. No. It is not a mutual. It's a mutual insurance operation. It is something whereby the depositors insure, but actually it is a government insurance to make sure that those who represent the government in taking deposits from the public, because when you take deposits from the public, you are actually licensed by the government, which means that I, the government of the United States, I am guaranteeing you, the public, that this institution will hold to their trust. And for that, then we give you that kind of guarantee. And to give that guarantee, the bank pays out of its profits, part of that profit, the actual premium for that insurance. And this is something that is done by the government of the United States. Doing mutual insurance is a little bit nebulous because they will ask you, but you didn't assign me that premium on an individual basis. You see what I'm saying, Mike?
I see.
Yeah. So the Sharia scholar will come and say, well, no, you have to call Mr. A and Mr. B and Mr. C and offer him if he accepts to pay the premium or not. Fair Muslim?